Hey Bowtie Nation, Joseph Hogue here with your most requested stock analysis, a complete analysis of PayPal, ticker PYPL, and why I think the stock could be worth as much as $500 over the next 5 years for a 377% return. With the ridiculous drop in the shares, down 25% in a single day this month and 63% from its 52-week high, a lot of you have been asking if I'm still bullish on this stock. In fact, I own 200 shares of PayPal at an average price of $150 a share, or about $30,000 investment, and it's one of the largest holdings in my portfolio. In this video, I'll show you a complete analysis for PayPal stock, including detail on how the company could be on the verge of a $20 trillion opportunity. I'll then reveal PayPal price targets from analysts and my own to show you exactly why I'm still holding the shares. We're getting started, but I've got to send that special shout out to all you out there in the Bowtie Nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. I'll be using StockCard for a lot of our research. I'll leave a link to StockCard in the video description below. Click through and then go to Portfolios in the top menu. You'll find the Bowtie Nation portfolio in the Stock Picks section. It's free to follow and you'll get email notifications whenever I buy or sell from the list. And as a special bonus, I've negotiated an exclusive discount for all you out there in the community. Use the promo code BOWTIENATION, it's all one word in lowercase, for an exclusive discount beyond the free trial. Now we're going to start by looking at the company's fundamentals, growth, and then why the stock is falling. Most of our time, though, I want to spend on just what the market isn't seeing, where the real growth for PayPal is before I show you those price targets and that return potential. And PayPal is quickly becoming everything you need in digital finance. Through acquisitions and self-development, it can do pretty much about anything. It enables retailer payments through its Braintree acquisition, allows you to send money internationally with Zoom, helps people with savings and couponing with a Honey app, offers bill pay and direct deposit, as well as a high-yield savings account through a partnership with Synchrony. Then bring all this together with that Venmo digital wallet, and you could conceivably handle every financial transaction through the PayPal ecosystem. And that's really a bigger opportunity than I think the market realizes just yet. Use of digital wallets passed cash last year in offline sales and have been the dominant payment form in e-commerce since 2017. You see in these two graphs the rise of digital wallets in that purple line here. E-commerce on the left and offline point of sales volume on the right. Digital wallets are now used in 45% of all e-commerce purchases and nearly 1 in 3 offline purchases. That trend in digital banking and handling all your money in zeros and ones instead of dollar bills is only picking up momentum, and PayPal is the undeniable leader in that space. A survey last year found that 60% of Americans now use a digital wallet at least some of the time, and what's interesting in this table is you see both PayPal and Venmo, so since PayPal owns Venmo, really it's 32% using PayPal, well above the competing wallets from Google and even Apple. Now we're going to come back to that upside potential on that trend, but you can already see the momentum here in growth. Revenue has grown at an 18% annual pace over the last 3 years to $25.4 billion last year. And growth slowed a little bit in the last quarter due to that eBay effect that we'll talk about, but management is targeting 20% annual growth over the next 5 years. And now maybe even more important than revenue growth, PayPal grew to 426 million active accounts in the fourth quarter and added nearly 10 million in the last 3 months alone. Now, one of the things that we'll talk about next and why PayPal stock is falling is that trend in new active accounts, trending down from 16 million new accounts in Q4 of 2020 down to just 10 million last quarter. And now there's really 2 reasons that I point to that explain most of that drop, and while it is disappointing, the company should be able to recharge that growth moving forward. Beyond that growth though, another reason why I like PayPal so much here is something we talked about a few weeks ago in a video on stocks that beat inflation. Because it's a digital company, PayPal is not going to have a lot of those supply issues or wage problems that we're seeing in a lot of other stocks. It's going to be able to keep up that profitability even as inflation eats away at some of these other companies' bottom lines. Now, the company's 2021 operating margin, that core measure of profitability, was 16.8% and more than 2% higher than it was over the last 3 years. With management's target of 20% revenue growth over the next few years, the company gets to $43.9 billion in sales through 2024. Now, analysts actually expect a little less, about 18% annual growth to $41.9 billion, so we're going to use a range of estimates when we look at the valuation on the stock. Here, though, I want to detail 3 reasons the stock is falling, the 3 major hurdles to PayPal, and then I'll reveal what the market is missing and what I think the stock could be worth. The big one here is just the loss in revenue after eBay stopped allowing sellers on its platform to use PayPal to accept payments as of June of last year. Now you can see here in the left chart the immediate drop in revenue growth from 31% in Q1 of 2021 to just 19% in the next quarter and then 13% in the last half of the year. Excluding that eBay effect, and the revenue grew 22% last quarter, a full 9% more than what was reported. That loss of eBay revenue was a hit, and it's really where you saw the stock start its drop over the last 8 months. And it's still expected to be about a $600 million drag on revenue this year, mostly in the first half, but then it's going to gradually fall out of comparisons. Now against this, PayPal signed a new partnership with Amazon this year that was going to allow users on the world's largest e-commerce site to pay with their Venmo wallet. That's not going to totally make up for the revenue lost from eBay, but it will significantly drive user growth and sales to help offset it. PayPal fell 25% on its fourth quarter release, largely on that slowdown in new account growth. Now, the 10 million new accounts added was quite a bit below expectations and what the company had done in the past, but if you look closely here, a lot of this was on 4.5 million accounts that management disqualified as being spam or illegitimate accounts. So without removing those accounts, the company could have easily beaten expectations and showed that new account growth, but you can't really fault management for that transparency. PayPal is still expecting to add over 20 million new accounts this year, and customer engagement grew 11% last quarter to 45.4 average transactions per account. Now that's the chart on the right here, transactions per account, and you can see it's grown consistently. So even if that new account growth is slowing, PayPal is getting more out of its existing accounts. Finally, the third big reason shares of PayPal are falling is just the slowdown from the wild ride during the pandemic. Everything and everyone went online over the last few years, and that meant a huge user growth and revenue for PayPal. Now that online sales growth is getting back to some kind of normal, comparing that growth against what we saw over the last year is going to be disappointing. Management is just trying to let investors down gently with a conservative revenue forecast for 2022, but we're seeing that disappointment in most of the e-commerce and social media names. And we looked at shares of Facebook a few weeks ago, another stock that lost 20% plus on its earnings report. But if you can look past that one-year comparison though, look at the longer-term growth, then the upside is still very much intact for PayPal. Into the second half of this year and 2023, that year-over-year comparisons start to get a lot easier, and that growth is going to start to looking great once again. Now that's going to improve investor sentiment and support this stock. Now I'm going to use just the current estimates for revenue growth when we look at that valuation on PayPal stock and the price targets, but there is something the market isn't pricing in yet, something that could double or even triple this stock price. We've already talked a little about the growth in digital wallets and the future of banking, but I want to show you a few more slides from the ARK Invest 2022 Big Ideas report. This is a 132-page report covering the opportunities in 14 disruptive ideas, including digital wallets. I'm covering each of these in separate videos, detailing the analysis and highlighting the best investments to make. I'll be putting this video and all that analysis into our ARK Invest 2022 Ideas playlist, so make sure you check that out. So we've already seen how the growth in digital wallets is overtaking all those other forms of payment as people increasingly switch to paying digitally versus cash or even credit. And we know that PayPal and its Venmo app just dominates this space with 82 million app users and used by 1 in 3 people that already use a digital wallet. ARK estimates that digital wallet usage in the US alone could surge to 190 million users by 2026. That would still be just 75% of smartphone users, and the global total could reach over 4 billion users. But here's where we get the discrepancy. Monetization of those digital wallet users is still just a fraction of the potential. We see an estimate for the potential value case per wallet user here on the right. This is how much all the services that PayPal could offer through its wallet, how much those would be worth. For example, being able to offer insurance products to wallet users would add about $2,400 to the valuation, while personal credit and mortgage products would add another $2,300. Now add all these together and each digital wallet user could be worth as much as $22,000 to a company like PayPal. But because digital wallet apps don't really monetize a lot of these services very well, or simply don't offer the services we saw in the last chart, the valuation per user on these apps is minuscule compared to that potential. ARK estimates that investors are valuing the Venmo app at just $250 per user in the current stock price. But now as PayPal develops those services and the products under the Venmo app, and as consumers continue to do more with their digital wallets, that valuation is just going to grow exponentially. And I'll show you exactly what that potential is after we look at the basic valuation for the stock. And we see here shares of PayPal are currently trading for a price of 5.4 times the sales that it's booked over the last year. That is extremely low against a 5-year average of 8.9 times and a prior low of 6.8 times the sales back in 2018. Now, one thing to note here on Stock Card, why it shows the price multiple as maybe overvalued is because it's comparing this company against those traditional banks and the credit services. So maybe not quite a fair comparison given the growth rates you see in PayPal versus those other companies. But we've seen that same drop in valuation on shares of Square, ticker SQ, and no, I'm not ready to call it Block yet, just like I'm not calling Facebook Meta. But Square has dropped to a valuation of 3.6 times sales versus its own 5-year average at 8.4 times sales. So investors have really sold off on these digital payment space. Now compare these valuations with a 19.7 times price to sales on MasterCard or the 19.3 times on Visa, and those digital companies look extremely cheap. So here what I've done is taken the revenue growth estimates and the price to sales ratio to do a quick back of the envelope price target for PayPal. Now you see 3 estimates for revenue growth across the top here, from 17% all the way up to 22% over the next 3 years. And remember here, management is targeting 20% annualized growth, so that would be to this $44 billion in the middle column. Then on the left, we're using the price to sales ratio to estimate what that stock price would be given those different revenue targets. Remember, right now PayPal is trading for just 5.4 times its sales. I think that's the point of max fear, so I'm using that as really our bear case scenario. Even that, though, produces a share price target from $195 to $221 a share over the next 3 years. Now, I think more realistic here is that investor sentiment does improve on PayPal, and the price multiple comes up to at least that 6.5 times on the price to sales ratio, and maybe even up to the 7.5 times. A price to sales of 6.5 times and management's estimate for 20% sales growth would mean a stock price of $245 in the 3 years, and I've done the calculation on the annual return on the right. That price of $245 a share in 3 years would mean you make nearly 30% return every year. And you see, even that bear case scenario though, the worst outcome with a 5.5 times price to sales ratio and that 17.5 sales growth, produces an annualized 20% return. Here, if we look at analyst estimates, we have 35 analysts covering the stock and an average target of $182 per share. Now that is a 1-year average target, so about 64% return on the stock, and 25 of the analysts have a buy rating on PayPal. Now, even looking at individual analyst targets, even the lowest price target for $125 a share is above where its stock's trading now. And that's by someone from SMBC Nikko, which not really even sure who that is, but you've got some legitimate targets for as high as $200 a share from Barclays and $245 a share by David Togut of Evercore. Now listen, the potential for a 30% annualized return or higher is great, and really all the reason you should need to buy the shares, but I think there is so much more for PayPal than the market sees. If digital wallet usage reaches anything like its potential, you could see this stock 3 to 5 times its current price. Now just consider this. If PayPal is able to monetize its digital wallet users, offering more products and services to reach a value of just $2,500 a year, and that would still be only a 10% of what the potential is that ARK is estimating. And at just 10% annual growth, that Venmo app reaches 130 million users in 5 years. That would mean the app alone would be worth $325 billion to the company's valuation. Now, growing the rest of the company's valuation at about a 20% annual rate on sales, and you get a total market cap for PayPal around $620 billion, or a share price of $530 each. That would be a 377% return, and I think even that might be a conservative estimate if digital wallets really take off. Now understand, these are just estimates, but it is hard to overestimate that potential and the growth in digital wallets, along with PayPal's clear dominance in the theme. That's why I'm holding the stock and even buying more. Check out our 2022 portfolio on Stock Card, or click on the video to the right for my Facebook analysis and why I think the stock could run to $800 a share for a 266% return. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.